Tomorrow, the Bank of Canada is set to make another interest rate announcement, and all signs point to a possible 0.25% rate cut. But what does this mean for Calgary's real estate market? And could things happening around the globe, like Japan's recent interest rate changes, impact us here in Canada? Today, we're chatting about all these factors and breaking down how they might affect you, whether you're buying or selling or just trying to stay informed. Let's start things off with the basics. What exactly is a rate cut, and why would the Bank of Canada go down this road? In simple terms, a rate cut means the central bank is lowering the interest rate at which banks borrow money. The idea here is to make borrowing cheaper, encourage spending and investment, and give the economy a bit of a boost. Right now, the Bank of Canada's policy interest rate is sitting at 4.5%, but there is a lot of buzz that they might drop it by another 0.25% tomorrow, bringing it down to 4.25%. The goal, well, to support economic growth while keeping inflation in check. So why now? Well, Canada's economy grew by 2.1% in the second quarter, better than expected, beating the Bank of Canada's forecast. But here's the catch. GDP per capita has been going down for 5 straight quarters, and growth kind of stalled in June and July. Even with that, most economists think the Bank of Canada will cut the rate tomorrow because of sluggish economic momentum and concerns over rising unemployment. The idea is to stimulate the economy a bit more, given the slower growth in areas like exports, construction, and consumer spending. Now, what does this mean for us here in Calgary, especially if you're thinking about buying or selling a home? Well, typically lower interest rates make borrowing cheaper, which can reduce those monthly mortgage payments and make owning a home a bit more accessible. Looking at the numbers, Calgary saw 2,186 home sales in August 2024, which was 20% lower than last year's record high, but still 17% above long-term averages. The benchmark price for a detached home was $762,600, up 9% from the same time last year. Now, we are seeing these prices come down a little bit over the last months. Even with higher interest rates, demand has been solid. So we've got people moving in from other provinces and new Canadians choosing Calgary, which is why our market is staying pretty lively. We're seeing a lot of demand from folks moving here from, like I said, pricier markets like Toronto and Vancouver, looking for more affordable options. Let's talk about mortgage rates, which are heavily influenced by the Bank of Canada's key interest rate. If the bank cuts its rate by 0.25%, we could see both variable and fixed mortgage rates drop as well. For those with variable rate mortgages, the impact will be almost immediate. Variable rates are directly tied to the prime rate, which generally moves with the Bank of Canada's key rate. So if the bank cuts its rate to 4.25%, variable rate mortgage holders could see their rates go down soon after, lowering their monthly mortgage payments. So that's the boat we're in right now with a variable mortgage, and we've seen our payments go down about a month after the announcements. So fixed rate mortgages are a bit different. They're more influenced by the bond market and the overall economic conditions. A rate cut could lower bond yields, which might bring fixed rates down too, but this could take a bit longer and will depend on how the market reacts to the bank's decision and its take on inflation and growth. Right now, fixed rates are actually lower than variable rates, which is unusual. So lower mortgage rates could help current homeowners and make buying more attractive, but rates are just one piece of the puzzle here. So there is more to the story, like what's happening globally. Let's talk about Japan's recent interest rate changes. Japan recently tweaked its ultra-low interest rate policy, allowing more flexibility in its bond yield control. This might seem far removed, but it could have a ripple effect here in Canada. When Japan signals that rates might rise, it can cause a shift in global capital flows. So a lot of global investors use something called a carry trade. They borrow money in countries with low rates like Japan and invest it where rates are higher like Canada or the US. If Japanese rates start to rise, investors might pull back from these trades, selling off assets in places like Canada or the US. This could cause volatility in global markets and push bond yields up in Canada, indirectly affecting fixed rate mortgages. Even if the Bank of Canada cuts rates to make borrowing cheaper, global factors like Japan's interest rate moves could complicate things a little bit. Now, let's break down what these changes could mean for Calgary's real estate market. Here are possible positive outcomes. Let's start with the good. Lower borrowing costs with lower interest rates. We could see mortgage rates follow suit, making monthly payments lower and homeownership more accessible. Increased market activity. So it's already pretty busy here, but cheaper borrowing could encourage more people to buy or sell, boosting market activity and possibly stabilizing prices. And I only say stabilizing because they've been going up for quite some time, and we'll see where they're going to head now. So relief for variable rate mortgage holders. If you're holding a variable rate mortgage, a rate cut could provide some financial relief pretty quickly. But there are also potential downsides too. So higher home prices. More buyers could mean more competition, driving up prices, especially if there is limited supply. Rising household debt. So lower rates might encourage more borrowing, which could add to already high household debt levels and create some long-term risks. Global market uncertainty. Like we chatted about, Japan's policy changes could impact global bond markets, influencing Canadian mortgage rates in unpredictable ways. So if you're thinking about buying or selling in Calgary, what should you consider? I mean, number one is always your personal financial situation. Can you handle the cost of buying, including potential rate changes, moving expenses, and home maintenance? Next, market timing. Is this the right time for you? I don't mean timing the market, but is this the right time for you based on your long-term goals? While lower rates could make buying more appealing, is this a short-term opportunity or are you in it for the long haul? Next, supply and demand. It's an interesting time in Calgary. We're seeing inventory levels rise and the effects of rate cuts on demand will be something to watch. If the market does remain tight, we could see prices drop more. Next, broader economic conditions. Remember, interest rates are just one part of the picture. Inflation, employment rates, and consumer confidence all play a role in shaping the market. At the end of the day, whether buying a home in Calgary makes sense for you will depend on your specific situation. A rate cut could make borrowing cheaper, but it also could lead to more competition and higher prices. Weigh the pros and cons based on your financial situation and long-term goals. But what do you guys think with the rate cut tomorrow? Are you planning to buy, sell, or just hang tight? Drop your thoughts in the comments. I would love to hear. And if you've got any questions, feel free to book a call with me. The link is below, and I'll see you soon.